Now let's move on to Super Group, and that company reporting a 70% jump in first half earnings last month. Now the group largely attributed the good results to the increased profitability of its African logistics operations and the performance of the domestic supply chain unit. Now Super Group's share price jumped 11% on the day after those results. Paul, you were convinced by the performance on the day after those results came out?
You know, the story here is even more colorful than with Imperial.
Yeah.
I mean, Super Group was one of the larger, exciting stock stories of the 1990s. CEO and founder Larry Lipschitz fell hard. All sorts of personal scandals. He fell out of the company. It basically had a near-death experience. It was very heavily geared, and as the crash came, it almost nearly went out of business completely. It was saved by Alan Gray, its anchor shareholder, who backed not one but two huge rights issues, which diluted everybody out of sight. The share price basically went from, I think, around 30 Rand to around 8 or 9 cents. So it was really on the brink of total extinction.
Right.
What we're talking about now is its recovery, because it was backed by Alan Gray and by the banks who extended them larger credit facilities.
Right.
It's got a new CEO, Peter Mountford, who's now building new credibility. They had a 10-for-1 consolidation of the share price, but it was one of those that the punters started picking up on as a possible rebound opportunity.
Were you one of them?
No, I mean, clients were phoning us about it, and I was like, are you crazy? How can you even think of that? It's like putting your head in a crocodile's mouth. But having said that, it has survived, and now it is kind of in rebuild mode. It's still moderately sized. It's a 4.5 billion Rand market cap.
Sure.
But it's kind of come back now to normal valuation. So at the current 10-for-1 consolidated price of 137 cents, which now becomes 13 Rand 70, I would say, buying them now is not an exciting or bold thing to do anymore. You're now just buying one of the other players.
No, but at the same time, Paul, if you look at the fact that the share price jumped 11% on the day after the results, that suggests that there's still many shareholders who are surprised by the strength and the good results that these guys are beginning to post.
And look, that's what happens with recovery stories. When they recover, people say, deep breath. Some of the shorts get out. And people sort of start putting it back into the long-term portfolios.
Craig, are you one of those who were surprised by the results as well? And by the way, like I said at the beginning, it's also one of those where revenue was up 23%, suggesting again some kind of pricing power.
Yeah, look, I think the results were not really surprising, because there was a lot of guidance to the market, and I think they were getting the restructuring right. They unfortunately had to sell some good assets in the past when times were difficult. They sold AutoZone and Midas. I don't know how great Midas was, but Imperial picked it up a bit later. But AutoZone was a good company, etc. But I think that where they are now is a good place, and they managed to pay down a lot of their credit facilities. Their gearing's only around 15%. They've indicated that they're going to look at share buybacks. They can spend up to R1 billion really on share buybacks. And on a 4.4 billion market cap, I don't think that's such a bad thing if they can buy back the shares at the right price. I know they indicated to the market that they were buying at about, I must remember the consolidation, we work out to, it was 1 Rand 40 at that stage, so about 10, 11 Rand. So I suppose it's right, more or less just under where the price is at the moment. But the point is, Peter Mountford has guided the market that you're looking at about 1 Rand 60 up for the year to June 2012, and that's pretty much on the cards, because remember, a lot of their business is based on contracts, so it's quite predictable in that short term.
Yeah.
And that's a forward PE of 8.5. If they buy back shares, you could bring that price earnings ratio down quite a bit to below 7, and then it's starting to look like a pretty good value.
So what's your sense now when you look at all those things combined? Do you think the growth that we've seen in this half, that has surprised the market to a degree? I mean, any time you see a jump as much as 11%, there's a degree of surprise in the market here. What's your sense? Are we likely to see this being sustained in the second half and in the years ahead?
Well, I think we could actually even see some extra surprises, because the Australian side of the business is doing very well. I'm expecting that we're going to see a weaker Rand. I mean, we're not seeing 6 Rand 50 as it was December 2010. We're probably over 8 Rand towards the middle end of the year. And that could bode well for the company. They're operating in Zimbabwe, Zambia, the DRC as well, and they're talking about Angola, I think Ethiopia, a couple of African countries, and they're all billing in US dollars. So in the current climate, where I think people are they're quite happy to take on full maintenance leases, put things off balance sheet, I think there's quite a lot of opportunity, and so I think there could be more surprises to come.
Yeah, Paul, let me put in a little more context here. Now, on the supply chain side, revenue in South Africa was up 22%. On the rest of Africa, revenue was up 24%. Dealerships, revenue was up 20%. That suggests strength all round here.
Yeah, and the observation I think you're leading to there is that people think when a company goes through the kind of nightmare that they did, that they don't have a business at all.
Absolutely.
And that it's all gone. But in truth, what has become evident from these numbers is that they do still have a business, you know, and they do still have assets that generate good money. So, I mean, in a way, one might say you're kicking yourself, but I would ask of Craig, if you can give him another opportunity, you know, is this the one irritating recovery stock dog that had fleas that recovered, which, you know, induces clients to go on buying these kinds of fallen angels? Or does he regularly make a habit of buying stocks of this nature?
Craig, quickly.
Well, look, it was a share that I had traded and got out a little bit early. I didn't expect it to continue running to the extent that it has. So, you know, it certainly does have the speculative, did have the speculative aspect straight after the rights issue. Then it was sort of 4.40 before the consolidation. But now that the restructuring has taken place and you can see it working, I think there's a lot of sound fundamentals to it, and one can't ignore that. I also like the fact that distribution's in mining and in pharma. And if you look at the pharma results and what's happening on the African continent, there's a story to be told.
So, Craig, perhaps you owe Peter about for the call here and tell him your thoughts. But for you, hot or not?
For me, I would go hot on this. Of course, with the caveat that there is a risk being a smaller company, but I'm expecting them to buy back shares, and I think we're going to see good results going forward.
Paul, what's your sense? Will you miss out the second time around?
Now I'm going to call it not hot. I think
hot.
I've had enough of this. Maybe some of these shareholders that scored are going to now book their profits.